Hey, you've joined the podcast with the most palm trees. Today we're going to talk about that earned income tax exclusion for Americans. Things are tricky, as you know. Lifestyle design for families, and we're going to do a lot of other stuff too. Let's get started. Somebody play the music already.
Yeah, buddy, you've downloaded Tropical Talk Radio, where we talk about all things entrepreneurship, travel, and lifestyle. If you're interested in more about this program, check out tropicalmba.com. And if you sign up for our mailing list, I will personally send you 50 free podcast episodes that take you along on our journey and expose the insider story on how we started a $1 million honest-to-goodness product business while we traveled the globe.
All right, welcome to another informal, unedited Tropical Talk Radio. I'm here with David and Carrie McKeegan, Tommy Schultz from TommySchultz.com, photographer extraordinaire,
thank you, sir,
and globetrotter, Mr. Ian, the CEO. Yeah, how's it to be back in Bali?
It's Bala.
All right, today we're going to talk about the quickest way you can make 35 to 40 extra grand next year. It's the Earned Income Exclusion Act, and it applies specifically to Americans, and you guys are experts in it. So Let us know the broad range. It's amazing how many American expats are not even familiar with the Earned Income Exclusion Act. And before you even get to that, let's back up a second. You guys are the most mentioned couple of all time on the Lifestyle Business Podcast, and you've never yet been on it.
Wow.
So introduce yourselves and your business. What kind of problems do you guys solve?
We are a U.S. expat tax business, so any Americans living overseas, we can help you out, get your U.S. taxes sorted for you, make sure you stay compliant, and make sure they're done right.
And I think the big thing for us is we know exactly where people are coming from, because we basically set up this business because we had the problem that a lot of people are having. Couldn't find anyone who understood enough about taxes to be able to prepare ours properly, who wanted to do it at a fair price. So we kind of get it, I think.
And you guys are like the family lifestyle design, right? You guys are like, I mean, everybody says this is for 22-year-old single dudes, but you guys are out here, like, obviously not 22-year-old single dudes. So how is it doing this whole thing with the family?
Oh, it's great. We're both 30-something MBA graduates, did our MBAs in Spain, went and worked in London for a bunch of years, and then started our own business. Now we're in Bali.
And you guys throw great pool parties. I figured we'd do the interview before I got too drunk. So tell me, who qualifies for this Earned Income Exclusion Act, and what exactly is it?
Okay. The Foreign Earned Income Act, or Foreign Earned Income Exclusion, it's not actually an act, it's an exclusion.
Got it.
Is a federal law that says, federal tax law that says if you earn up to, for 2010 it was $91,500. Next year it's $92,900, I believe.
Okay.
Yes.
In foreign earned income, so income you make outside of the U.S.
Okay.
So rental properties and stuff like that you have in the U.S. are not going to qualify for this. But if you're living and working outside the country, you guys talk a lot about setting up foreign corporations. If your business is set up in a foreign corporation and the foreign corporation is paying you a salary, that would qualify for this.
What about if my California corporation's paying me? Does that, and I'm living overseas?
If you're living overseas, you'll probably still qualify as long as you meet the physical presence test or the bona fide resident test.
Let's talk about that, because what most people assume is that you have to have a foreign tax home. I'm hearing a lot of this. If I'm not paying taxes to the Philippines or here in Indonesia, can I still qualify for this?
You can. There's two ways to do this. So the bona fide resident test basically says that you're a bona fide resident of a specific country.
Okay.
That means that you're living there full time, you're earning money there, you're paying tax there, and that you have no intention of returning to the U.S.
Now, how do you prove that you're paying taxes there?
There's a couple different ways. You can use the foreign tax credit, which is Form 1116, to offset the foreign tax that you're paying dollar for dollar in your U.S. return. But basically, your accountant will help you, tick off all the requirements to be a bona fide resident. Okay. But the main ones are that you're living permanently in a foreign country and that you have no intention of returning to the U.S. in the foreseeable future.
What about most of our audience? They're like globetrotters. They're always on airplanes. Maybe they're not back at the States much. How do they qualify?
the other way you can qualify is via the physical presence test. The physical presence test says that you have to spend 330 days inside a foreign country in order to qualify for the foreign tax credit, which is the 1116, and the foreign earned income exclusion, which is Form 2555. So to qualify for the physical presence test, you just have to make sure that you are inside a foreign country for at least 330 days, consecutively, like in the 365-day period.
Out of the period that you're filing for. So is it from January 1?
It doesn't have to be. It can be March to March. It can be April to April.
So you just don't pay taxes on income then earned during that 365 days?
Exactly.
Okay, interesting.
But the thing to note is that a lot of people get confused about whether it's 330 days in a foreign country or 35 days inside the U.S. And that's the wrong way to think about it, because time spent in transit doesn't count as time spent in a foreign country.
So if you're putting it really close, that's important.
Sounds like an IRS policy.
Well, all right, let's say you're Ian and you fly to Bali from California. You're flying over global waters the whole time.
Right.
So your clock doesn't start ticking until you hit the ground in Bali, and then it's 24 hours after you hit the ground.
Right.
Well, no, I thought it was if you pass over a territory. So,
well, yeah, but Ian's flying over the Pacific Ocean the whole way.
but what if you go around Japan?
So-
well, come on.
So
if you fly into
Tommy
Japan
flying from
territory,
Virginia, as soon as he starts over
North Pole.
the North Pole, Greenland, Europe,
yeah.
whatever, that's when his clock starts.
Yeah.
Right. I'd love to see this conversation while you're in like the IRS sort of interrogation room, and you're like, look, I was flying over Alaska,
Pull
asshole.
out the map. Yeah, I mean, I was thinking that.
My flight was diverted over the British Virgin Islands.
Well, there was one time, yeah.
Let's talk about philosophically how you deploy this, because if you're making your money on the internet, I mean, how much money could this save in America in a year if you were mindful enough to stay out of the country for 330 days a year? I often say 40 grand. Is that reasonable?
Well, the foreign earned income exclusion for the 2011 tax year is going to be $92,900. So it'll save you $92,900 if you qualify. But if you
It'll save you
qualify,
that. Wait a second. I don't understand that, because it will save you that much absolute money, or will it save you being taxed on that money? Because I thought you got your first
it'll
91.
mean the
Yeah, that's
first
not bad.
92.9 will not be subject to U.S. taxes.
Okay,
it.
so that's approximately, depends on what tax bracket you're in, but that could be anywhere from $30,000 to $40,000
Yeah.
potentially.
Yeah.
Yeah.
So one thing that you
That's the
said
way
to
I
me
look at
that
it,
really
yeah.
stuck in my mind is you said, this is one of the most profound financial moves you can make if you generate less than $500,000 in earned income annually.
Well, yeah, if you take, let's say you're married, and you're both working in a business, right?
Right.
You-
Let's say hypothetically we know people like that.
Yeah, hypothetically. Both people would qualify for it. So then, bam, you're almost up to $200,000 right there.
Right.
Then you throw in the foreign housing exclusion, which allows you to deduct a certain amount of your housing costs,
Right.
which here in Bali isn't that much, but in London, I think for the 2010 tax year is like $86,000 more that you could deduct on your taxes.
Right.
So if you're a married couple living in London, off the bat you can make roughly $300,000 tax free there.
Right.
Tax free in the U.S. standpoint, or
Right.
That's great.
it's a little different because taxes in the UK are already higher, so it would offset anyway. But let's say you're in Dubai, where there's no taxes, and you can make $200,000 plus a year completely tax free living.
Word.
Tommy, has this been any challenge for you I mean, you've been qualifying for this for a couple years now. Has it been any challenge for you?
Yeah, so Dave and I were talking about this yesterday, and I confess that I used TurboTax.
So, all right,
Hey, we get a lot of great
For
customers
shame.
coming from TurboTax.
All right. I guess I need to know about this. I mean, my business is, I'm just a sole proprietor, so mine it's much more simple than what you guys have. And I haven't hit 92.5 yet, but I aspire to be there soon. And anyway, yeah, so I just file through TurboTax. I've been doing it for 5 years. And I'm very careful about, I'm mindful about the flight paths,
Right.
what route your plane takes out of whatever airport.
Wow. That
well,
is intense.
if you cut it close, I mean, last year I spent 35 days, exactly 35 days home.
All right, so I'm sufficiently depressed. If you guys need more information on American expat taxes,
One quick note for all the entrepreneurs out there.
we're talking about taxes.
But it's great.
The
You're saving
foreigner
us money.
income exclusion does not help you with social security, FICA, all that.
Right.
So that would have to be paid before the exclusions.
Got it.
Which is what, about 16, 17%?
It's about 13%.
13%.
So, real quick here, if you're on somebody's payroll, like say you're an employee, right? Maybe you're not a business owner, but you're an employee, and you're on somebody's payroll, and those taxes get deducted from your paycheck every month. You're basically going to get a fat refund. Is that how that works?
Like if you've developed some kind of freelance?
I guess you'd have to ask why you're on somebody's payroll and having it deducted in the first place.
Okay.
But yeah,
Yeah.
if you qualify for it all, you would get that money back.
Okay.
This would be interesting for like these there's a lot of developers. In fact, Evan, who was staying at the house the other day, he's like a Drupal developer and negotiated a remote working arrangement. So he's out of the country all year long on Skype. So that might be an example. He's probably getting withholdings that he could get
Yeah,
back.
he probably is, yeah.
Yeah, potentially.
He'd be one of those. I mean, that would be...
We need to call Evan.
Call him up. Well, that would be hard to arrange.
We need to send him this podcast.
I would think that'd be the exception. Most people would be freelancers, not on a full salary.
Right.
So no one deducts any of my fees.
Right.
And I just file it, albeit with TurboTax, but I do just file it. Although actually I do want to
Tommy's waiting for the phone to ring.
Yeah, I do want to
Very
talk to
brave
you.
guy.
I did
You
promise
can excuse
myself.
yourself after that.
I know. Well, I did promise myself I'm going to talk to David.
Let's talk about the fun stuff. You guys have lived in Uruguay. You guys have lived in Brazil. You're moving to Argentina next year. Now you live in Bali. How do you do all this? I mean, was it scary for you to make the jump out of the career into being entrepreneurs? By the way, if you're interested in this stuff, greenbacktaxservices.com. You guys got a blog and you cover all this kind of stuff.
Yeah.
David at greenbacktaxservices.com.
D. McKeegan.
D.
Greenback
McKeegan.
Tax Service.
Probably better to email Carrie because David doesn't work that much.
See McKeegan.
If you want to get something done.
I mean, I don't know what you think, but I think for us, we were born travelers, and, from the minute we could kind of we love New York, but from the minute we can get ourselves out of New York, we were excited to go see the world, so I think it didn't feel like as big of a plunge as maybe for a lot of people it would feel with the toddler or with the newborn baby. Mm-hmm. We were kind of okay with the idea of all the challenges it would entail because we were so excited about doing it.
For the parents out there, like, how do you think Timmy's experience has been? Do you worry about him not having like a normal childhood in quotations, or, I mean, how do you frame that up for yourself? Do you think it's been positive for him to?
Oh yeah. I mean, I guess occasionally you think, he doesn't get to see his grandparents, he doesn't get to see his cousins, and that, you have to do everything you can to kind of get back and Skype all the time and establish that relationship in whatever way you can. But for him, I mean, he spends his days on the beach, he gets to know all these interesting people. He's learning all these languages. I mean,
He knows
I
more
think it's a
Indonesian than I
fabulous
do.
experience.
He's learning how to swear.
It's great.
I had a similar growing up experience because I grew up in Mexico City, and for me that was all positive. I mean, I really enjoyed every minute of it. So hopefully he'll feel the same.
What's the difference between your experience here in Bali and your experience in South America in general? I know it's sort of general, but like say Uruguay, for example. What's the difference living on the beach over there and living on the beach here in Bali?
I think Bali's a lot more laid back. Brazil's much more intense, high energy, high excitement. The language, ironically, it's a lot easier here because everyone speaks English, whereas you go to Brazil, you go to Uruguay, people are speaking Portuguese and Spanish, so you have to communicate in their language as opposed to in Bali, to be honest, we expect most people that we communicate with speak in English.
And here in Sonora, it's just like a sleepy little town,
Right.
Whereas when we were in Brazil, we were in Ipanema in the middle of Rio de Janeiro.
Oh, wow, yeah.
And, the beach is right there, but you're in the middle of a hustling, bustling, city of like 15 million people kind of thing.
Right.
It's dangerous. It's a dangerous city.
What are the biggest things you guys are going to miss about Bali when you leave, you think?
Well, we're
Besides
coming
us.
back. We're coming back. The beach, I love being able, we're not going to have that in Argentina quite as much, but just being able to go out on the beach every day, and, you have days where you're working on something and it's just really intense and you need to clear your head, and you walk over and you walk on the beach for 15 minutes and it's like,
Right.
done.
Yeah.
We didn't get that in London, didn't get that in Rio, didn't, a lot of places didn't get that.
Are you guys expats for life?
Is my mother going to hear this show?
Probably not.
Better question. Is my mother-in-law going to hear this show?
Definitely not going to hear this show. My mother doesn't even listen to this show. You're safe.
I think we probably are.
Yeah,
It's
I
hard to go
can't
back.
see any reason to ever go back. And now, that could always change and all the rest of it. But
It's tough to
it's just such a nice lifestyle living in some of these other places that it's really hard to beat.
But the great thing is, I think with a flexible lifestyle like this is you don't have to decide. I mean, if one year you feel like, I'd really like to spend some more time at home, you just go do that, and then
Yeah.
you go back out. It's not as permanent, any decision you make.
Yeah.
So you guys are in a privileged, or whatever you want to call it, that situation where you see thousands of tax returns every year. For the entrepreneurs listening, what are some huge 80-20 mistakes or some big things simple little things that people can do to save some money or to make this whole tax situation easier? Because, for me and Ian, it's very intimidating, difficult process. What are some basic things we can do to save some money?
Biggest one is make sure you qualify for the foreign earned income exclusion. This year we're going home for Christmas for 3.5 days kind of thing, just to make sure we qualify. Because otherwise, that extra day could be really expensive.
And
Right.
a chance to kind of avoid the mother-in-law. that's handy.
We're actually going to Brazil with the mother-in-law.
She's a cool mother-in-law.
Any
I
mistakes?
guess that would be Carrie's mother.
Any mistakes you guys seeing thousands of tax returns every year? I mean,
Biggest mistake is people that don't file. There's this big misnomer that once you leave the United States, you don't have to file anymore.
Right.
Not true.
Failing to file the F-bar.
Yeah, you have to report your foreign bank accounts if you have over $10,000 cumulative outside the U.S.
You might want to explain that, because
Wow.
you literally have to file. You can get fined if you don't do it, but there's no penalty if you do it right. You know what I mean?
The F-bar is a treasury form that's enforced by the IRS. The deadline is June 30th, and you have to file, even if you don't owe money on your taxes and all that, you still have to file this by June 30th, no extensions.
if at any point you had $10,000 at one moment over the
Could be
last
for
fiscal
2
year.
minutes because of exchange rate fluctuation.
Oh,
So if you have 5,000 pounds
Wow.
in a bank account, and all of a sudden the exchange rate shoots up to 2.1, and all of a sudden you have a balance of over $10,000 for a minute.
Oh my
So
You
let's
have to
say
file.
hypothetically that Tommy here has a local bank account and he keeps $10,000 in it.
Mhm.
He's going to have to file.
Yeah.
I have to declare that.
or you expose that bank account to the IRS. Let them know.
Yeah.
And do we know what the fines are off the top of our hat?
The fines start around 10 grand per year.
Okay.
So if you have $100,000 in a bank account and it's earning 2% interest and you haven't reported it for the last 10 years, the IRS can take the whole lot.
Got it. So it really behooves you.
That said, our experience so far is that people that voluntarily come forward and file these and say, sorry, I didn't know about this, have not gotten penalized at all.
Okay. At any point, so you've had people that have waited years to file.
We've had people who haven't filed in my lifetime
Okay.
Wow.
until this year.
What happened? They just said, welcome back, or?
Yeah, you file for, depending on your situation, you can file for the last 3 to 8 years, and you just get back on the grid. You become
But there's no
a member of
penalty?
society again.
There's no penalty with that?
No, because a lot
There
of the
could
people.
have been. But they
There could
chose
be.
not
Yeah,
to
there
give
could be.
You know, I was in traffic court the other day, and a guy had a ticket from 1988, and the judge just laughed him out of the courtroom. He said, "Just forget about it." So I think this is a good strategy for everybody.
Wow.
Just wait long enough, right?
Just wait it out, man. That works for invoices too.
Yeah.
You'd be surprised.
Doesn't work for entrepreneurs, because if you're an entrepreneur and you haven't been paying your Social Security and your payroll tax and all that kind of stuff, that will accrue, and you will owe tax and penalty on that.
Oh, lovely.
We had that happened to somebody a couple years back who ran her own business and hadn't paid any of this stuff and got hit with a huge tax bill as a result.
So I'm
Yeah.
hearing two things. Exclusion Act, number one, get out of the country 330 days out of the year if you can, if you're an internet marketer, if you are so fortunate. Number two, FBAR, make sure that you expose your foreign bank accounts to the IRS, to the Treasury Department. Any other big things that we can do to make sure that we're saving money?
Yeah, the other one, depending on how your salary rolls in and what is happening with exchange rates, you can pick, as long as you're consistent, you can pick what method you use for changing your money from whatever your foreign currency is into US dollars. So, take Bali, Indonesia, for the last year. The exchange rate's gone from about from about 8,200 rupiah to the dollar all the way up to about 10,000. So you got about a 20% change rate in it. So at the end of the year, the IRS will publish the average exchange rate for the year. But if you got, let's say you got a big bonus or you got paid on certain days, you can do the currency exchange for those certain days, compare that to the rate for the whole year, and see which one has a lower US dollar amount, and use that one on your taxes.
Oh.
And we've had people save.
It's totally legit to do it.
Yeah, we've had people save a couple $1,000s doing that.
Oh, yeah.
Like people that are like big traders or people that get big bonuses, like bankers and stuff like that, who get a big bonus on one day.
Yeah.
Can benefit from that kind of thing.
Interesting. So if you can plan your bonuses, you're saying you should maybe do it in a time where the currency is a little bit better, where the exchange rate's a little bit better.
Yeah, you can do.
But I thought you were saying you can choose the day to be most favorable to you. Is that what you're saying?
Well,
throughout the year?
As long as you're consistent. So you can say that I'm going to use the
30th.
rate at the end of the month for the whole year, or I'm going to use the rate that's the average for the whole year, or I'm going to use the average rate for the month, or I'm going to go back, even though I got paid every 2 weeks, I'm going to go back and pick the average rate for that day all through the year.
I love it. 3 hot tips. That's 20 minutes. I got to get in the pool, or else we could go on for another 20. Thanks for joining us. The best place to reach you guys is greenbacktaxservices.com/blog. I'm assuming.
Not /blog, just regular.
Just regular.
Yeah.
Just on the site, or shoot us an email.
Cool. Thanks for joining us, guys.
Thank you.
Thanks.
Hey everybody, thanks for listening. Don't be shy. We've got a mailing list. Check it out at tropicalmba.com. Get yourself signed up, and we'll keep you up to date on everything we do, plus give you those 50 free podcast episodes. If you want to say, hey, check me out on Twitter at tropicalmba. We'll see you soon.